Hey gang, Dennis Tubbergen here with another economic video update. And today I want to talk to you a little bit about the housing market. I want to share with you a post from Financial Samurai. You saw I just scrolled up to that. It's titled, "It's Time to Start Worrying About the Housing Market Again." And there's several good points made here. But fundamentally, he shares the same opinion that I do in that the housing market is in a bubble, as are stocks. And I arrive at this particular perspective simply because when you study history and look at the Panic of 1837, look at the Long Depression of 1873, look at the Great Depression, more recently look at the tech stock bubble that corrected around the turn of the century, and the stock market correction around the financial crisis. Every single one of those bubbles that crashed was preceded by money creation, by currency creation. So you don't have to be a trained economist to realize that when money is created, when currency is created, it's going to find a home. And in this particular post, there are 5 really good points to make somebody do a double take and reconsider if they're thinking about buying real estate this year. He starts out by saying if you lose 50% on your stock or bond portfolio, you'll be upset, but fine. And incidentally, as a side note, I think that's a real possibility here moving ahead. If your property loses 20% of its value, however, this means you've lost 100% of your 20% down payment. In this scenario, you'll also be fine unless you have to sell. And if we see real estate prices crash, if we see stock market prices crash, that affects the employment market, and often people are forced to sell. Now, there's 5 reasons that you should think about maybe renting or taking a deep breath if you're thinking about buying real estate. First of all, rents have softened from peak levels in many of the most expensive cities. Rents are often a leading indicator to real estate prices, and if you look at markets around the country like San Francisco, New York, Boston, Washington, D.C. even, which is a really hot housing market, Miami, Honolulu, you see that rents are down significantly in every one of these cities. In Chicago, down as much as 24%. Second thing that you should think about is that mortgage rates are rising. In today's market analysis, I talk about the fact that U.S. government bonds are really at a head and shoulders top, which is a technical formation that makes me think there's some downside here, which means interest rates will have to go up. Remember, interest rates and bond prices are inversely correlated. They move in opposite directions. Mortgage rates are going up, and when that happens, the real estate market also softens. And when you take a look at the third reason here, prices have blown past their previous peaks in many cities. He mentions that if you look at real estate prices in Denver and Dallas, you'll find the prices are 45% higher roughly than they were in 2006 and 7. That's similar to San Francisco. Seattle and Portland are 20% above prior peaks. If you look at the entire country, he points out that the U.S. median existing home price is about 12% higher than its previous peak, which is a modest rise. So when you see prices blowing that far past a prior peak, which was a bubble, you've got to conclude that the current price is also a bubble. 4, the recent tax package that was passed limits deductions for state income tax and property taxes. Now, it takes a little bit while for that to kick in. People are not going to realize that their property taxes are not fully deductible in many expensive real estate markets until they file their tax returns in 2019. That will also be a negative effect, or will have a negative effect on home prices. And then finally, it takes a while for the market to wake up. It takes a while for the market to figure out that, hey, that was a peak. The housing boom that began in January of 1996, due once again to Fed policy with Alan Greenspan at the helm, ended in March of 2006, but it wasn't until the beginning of 2008 that people started to accept that the housing market had already peaked. You don't see a peak until after it has occurred. So, what should you do here? Well, I think that if you're thinking about buying real estate, you should probably keep your money in cash because there will be a better time to buy real estate in the future. That's today's economic update.